Good morning, everybody. Happy Monday. This is the live market open for Monday, January 25th. Hope everybody had a great weekend. As usual, I'm Yohay Elam, ForexCrunch.com and Market Movers podcast, doing the show for FX Rate as every morning. As usual, we'll talk about recent developments. Some of them are a bit calmer than we had beforehand. Maybe it's the calm between the storms. Some charts and levels, the next 24 hours, and of course your questions. I see a few of you woke up this morning and got into the chat room. Welcome. If you cannot see the chat box under the screen, please go to tlk.io/fxrate-forex-live-video, basically the address on the screen. Okay, so what did we have back on Friday? On Friday we had a few releases, but they seem to have little impact. Anyway, we had Eurozone purchasing managers indices a bit lower than we had beforehand, a bit worse than expected. The euro was a bit weaker, but I cannot say it was a reaction to these PMIs. UK retail sales disappointed, and then the initial reaction was a weaker pound, of course. Yeah, okay, so that made sense. But after a few minutes, no more than 15 minutes, I think, we had the pound rising once again. Canadian data was mixed, lower inflation, and lower inflation could imply more support from the central bank, an interest rate cut or something like that. Once again, first of all, it was mixed with retail sales, which were a bit better, and also it was mixed with the atmosphere in markets. So I'm talking about the indicators, but what we had mostly is markets moving their own way. And US existing home sales provided sort of a sweet finish to the week because they came out a bit better than expected at 5.46 million. Also the US market flash manufacturing PMI came out a bit better than expected. So, and that sort of contributed to the better market mood we had on Friday. But that's not the main reason for the better market mood on Friday. What we had, you can see here the chart of euro dollar. We had this fall in euro dollar, this slide, the fall of Draghi, then a recovery, but basically euro dollar is weaker. That's because of the risk on atmosphere. No need for safe havens. Draghi is said to buy euros and weaken the euro and in general support markets. The Bank of Japan, we heard from them last week, from the Governor Kuroda and also from Prime Minister Shinzo Abe, talking about more action from the Bank of Japan. They didn't like the currency strength. I remember dollar yen last week fell all the way to 116, and euro dollar also was sort of looking towards the highs. These are the safe haven currencies, and now things have improved. Okay, so we've seen commodity currencies rising, oil prices rising. Perhaps the best example, as I said, dollar yen. Here at 118.42 this morning, the yen is strengthening a bit, so maybe it's some kind of a reaction. But look at this wild recovery. 116 was probably the line in the sand for the Bank of Japan to begin talking about the strength of the currency, how much they don't like it, how much they're ready to act. Okay, so currently 118.44, but dollar yen already touched 119. 120 is of course high resistance. 118.30 is support. Okay, and when safe haven currencies fall, we have commodity currencies rise, right? And also the pound, which joined the the risk camp. Okay, so we had, this is the chart of pound dollar. It fell under 141.25, which was sort of support for some time. Fell even under 141, was trading at the 140 handle. Okay, very low levels, but then it made a remarkable recovery, went all the way up to 143.60. Since then, of course, it weakened a bit. Movements are not a one-way street, and Forex trading 142.65 is the current level, but certainly above the lows seen last week, above this pressure. Remember last week also we heard not only from the Bank of Japan and from the ECB, we also heard from the Bank of England. Mark Carney said that now is not the time to raise rates, and other similar worries about inflation, about China, basically also supporting markets. Okay, Now, commodity currencies, here we have dollar CAD, one of the more exciting currency pairs of late. We had dollar CAD touch 147 last week when oil prices were at the bottom and everybody was expecting the Bank of Canada to act, or most of us. Okay, so we had it reach 146 resistance, 147, then finding when the Bank of Canada didn't cut and when the market mood improved, 144.40 worked to support it for some time, this kind of head and shoulders if you wish, and then we had another collapse, even though on Friday data from Canada wasn't that good. So in recent hours, we are seeing dollar CAD rising. So maybe there's a reaction, maybe there's a risk-off atmosphere once again reawakening, but I would see it more as a profit-taking move because we didn't hear any negative news from markets. Okay, let's continue. The same positive atmosphere continued also with the Australian dollar. Yes, once again, this morning sliding under the round number of 70. But look at this nice recovery. It had a very clear bottom here at 68.30. Very strong support. From 68.30, it managed to rise, find some resistance just under 69.55. After two attempts failed, the third attempt made it higher, and we made it to higher ground. Good morning, Jax. So we did have also the Australian dollar recovering. Also, when we talk about the Aussie dollar, we should talk about China, of course. China is a source of worries. China held the global growth picture since 2008, 2009, and when China began slowing down, things were turning for the worse. Now, in China, we had also statements about supporting markets, don't short, don't sell the yuan. We will help most investors and things like that from the Davos conference last week, the World Economic Forum. And the Chinese yuan is indeed stable. Chinese government is ready to take more measures. They're sometimes taking too many measures at the same time, but anyway, it's clear that they're willing to act, and that's also supportive of China, supportive of the Australian dollar. Okay, so 70.65 is sort of weak, not as strong as it used to be. Resistance on the top side. 69.50 is very strong support. Okay. Kiwi dollar, same here. Yeah, last week we actually had bad news from New Zealand. Okay, we had CPI inflation falling more than expected, milk prices falling, and we had this deterioration to the 63 handle. But since then, better mood in markets, improvement, traded above 65 already. Yeah, this morning we're more or less balanced on the day, sliding in the past 2 hours or so, back to lower levels, under 65, but still relatively strong. Okay, question here. What's good about your session is I get to see different angles and what's done. We just know central bankers need to talk equities because they have invested there unless they are buying dips. Yeah, central bankers are sort of people from the academy in theory, and they are managing the economy, and they have to take care about inflation in the medium term. Okay, they have to have 2% inflation in the next 1 to 3 years. That's the target of most central banks. The Fed also has employment, other ones. But in many, many occasions, it seems like each time there is some kind of stock market panic, central banks are there to the rescue. Last week, it was quite remarkable. It was day after day. Bank of Canada didn't cut, but they said they were almost doing that, and they're just waiting for the government because the government told them that the government is going to act in Canada. Okay, then we had Carney saying that now is not the time to raise rates. We had the Bank of Japan talking about action, and the Japanese government as well. And of course, we had Draghi on Thursday giving us the clearest hints possible that the ECB is going to act. Next month, March, he said March, so many times in the press conference, and we know that they're ready to act because of deteriorating conditions. Now, this week we have 3 rate decisions. We have the Bank of Japan, which I mentioned on Friday, that's the last one. It's unclear if they're ready to act now that we have the yen a bit weaker. Maybe they will not act so fast, okay? But, and we have the Reserve Bank of New Zealand. With a stronger Kiwi, they might act, and with weaker inflation, but they'll perhaps wait until the Bank of Canada like the Bank of Canada did before moving. And we have, of course, the most important one, the Federal Reserve, the biggest country, biggest economy in the world. They're the central bank, perhaps, that went the other direction. I mean, they went the other direction. That's sure. That's clear. They raised rates in December, but they sort of were a bit more hawkish, and they weren't that supportive of the stock market. But after a month of trouble, maybe they will also become a bit more dovish. According to the implied probabilities, there's absolutely no chance of rate hike, of course, in January. Okay, 88% against the rate hike in January, and also when you look at March, 67% against the rate hike. It was around 50-50, and it's steadily been on the rise. Okay, and I think we'll get some dovish message from the Fed this week. Okay. Let's continue with more currency pairs. Dollar Swiss. Swiss franc also weakened after a few weeks ago. The Swiss National Bank said the franc has to weaken. So, but it's moving more with the euro. Dollar Swiss 101.45. I would say 102 is some kind of resistance. 101.50 is support. Euro Swiss at 109.73. Very stable in the higher range. Okay. Look how it traded in the lower range. 107.60 was sort of the line in the sand, but since then it made a move. I don't have any proof of ECB action, but I certainly suspect that's what happened. And now they seem to defend 109. 110 is resistance. Ranges are very, very tight. Okay, Euro Pound just under 76. Quite a roller coaster there. When things looked bad, when Carney talked about not the time to raise rates, and when stock markets continued falling, we had the euro pound rise up to 77.40. Since then, of course, we had Draghi and we had a better mood in markets, and down we go up to 75.88 at the time of talking now, under 76, which is resistance. I would say, yeah, 75 is some kind of support because it's a round number. We have a question here. The question is unrelated to current markets activities. You can answer it at the end of the session. I was reading up about the flash crash in 2010 with high-frequency traders using algorithms to trade, which caused massive drops in stock markets. How do algorithms impact the Forex market? Are they used by big hedge funds or go with or against? Well, electronic trade, automatic trade is becoming more and more common. There are various algorithms. Some of them try to understand, do sophistical technical analysis. They read the headlines that come out, and they try to make the right decisions. Some of them are just go for speed, are the least sophisticated possible, just to get those nanoseconds and to get into the market on time. Many have false orders. So this mess with algorithms can skew markets. One example is when each time Draghi says downside risks, you can see a small dip in euro dollar because it's read by algorithms before we manage to do it. And these negative words have a negative impact on the euro. Even though in the wider context, when we humans understand what he actually said, he said there are downside risks, but also upside risks, and it's not only negative. It's not the case of Thursday when he talked about new downside risks. But yeah, algorithms they can make a mess. That's why I suggest trading after the news, after we understand what's going on, and not try to gamble on markets and not try to act too fast and too furious. Okay. Anyway, more charts. Euro yen, safe haven pair. So both currencies slipped. Both currencies suffered under the better market mood, but still very much in range. 128, the range I would say between 127 and 129. At some point last week we had the yen maintaining its strength while the euro weakened, so we had euro yen fall to lower levels. Yeah, you're most welcome. And pound yen, the clear risk on, risk off contrast. A huge fall with pound yen, of course, the pound being the risk currency, the yen being safe haven. We reached these lows under 164. Since then, we're moving up. Today, we already touched 170. Now, things are a bit worsening, so we're a bit lower under 169, but lots of pips here to be lost and to be earned. So I think 170 works as some kind of support. Sorry, resistance. Anyway, this is quite a roller coaster pair. And we cannot forget oil. Also here, speaking of roller coasters, all in all, the trend is quite clear, right? It's down, 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 and down, especially at the beginning of 2016. We reached new lows under 27 bucks, right? Or not 27.50, sorry. Maybe Brent was a bit lower, but since then we had a huge rally in percentage terms. These are moves of around 10%, moving from 27.50 up to almost $33. Huge recovery. It's not because of the supply side. There's still too much oil floating around. Iran is coming back online. Russia is not stopping. Saudi Arabia is not stopping. The shale industry is showing resilience, but there's sort of more hope for demand and more hope for speculative money coming via central banks. So oil prices, yes, again this morning, some profit taking, some renewed risk off, but it's quite limited. It's not, the bigger picture remains positive. Okay, so that's the price of oil. And yeah, S&P futures are a bit lower. Anyway, so now we have a slight risk off morning, but in the bigger scheme of things, and if you look at euro dollar, the world's most popular currency pair, we're at 108.25. We're only 34 pips higher on the day. I would not call it exactly a risk off day of safe havens. Okay. Any questions? Let's talk about the events of the day. Actually, immediately after the show, we have an event which hopefully should have an impact. Yeah, it's sort of a profit-taking risk-off morning. I cannot see any significant headline. We did have here in the south of Spain, off the shores of Spain, some kind of earthquake. As far as I know, there's only damage, nobody hurt. It shouldn't have a big impact on markets. What we do have here in Spain is another weekend of uncertainty regarding politics. I'm finding it quite hard to follow Spanish politics, but we had, let's talk about that for a moment because it could have more of an impact. Okay, we had, it's a democratic monarchy. The monarch, like in the UK, is the head of state. So the King Felipe, he talked to the various parties, and he wanted to give the mandate to the biggest party, to the center-right Partido Popular, which is now in power, prime minister, or as they call it here in Spain, the president of the executive, or in English, prime minister, to give him the mandate to try to form a government. But he immediately declined this offer because he didn't have enough support. At the same time, he said he's still the candidate, even though he declined it. Now, then the new left-wing party, Podemos, they went out to the press, said, we're ready to form a government with the other left-wing party, the Socialists. The Socialists said, wait. First of all, we need the mandate, don't push it. Anyway, things are quite complicated. And now this morning we had a warning from Brussels saying that Spain urgently needs stability in the government and, of course, to follow our rules. So we had, I think, it's already over 1 month since the elections. Elections were held here on December 20th, as they call it here, 20D. And since then, we don't have a new government. It's only an acting government. Okay, so this mess could continue for quite some time, and eventually it could have an impact. Okay, let's move back to today's events. At 9 GMT, just after the show, we have the German IFO business climate. Okay, this is an important survey because it's Germany's #1 think tank. Let's refresh this. Yeah, it's right here. So the headline figure, the one to watch, is the business climate. It is expected to slide just a bit from 108.7 to 108.4. German businesses will be worried about China, of course. We'll be worried about how Germany handles refugees, but we'll be probably happy about the weakness of the euro in general and support from the ECB. Subcomponents here are expectations for the future. Similar picture, small slide from 104.7 to 104.1, and the current assessment, which is what is the situation right now. And here, no change is expected. Okay, so any small change, especially in the headline number, if it's under 108, for example, it could have a negative impact on the euro. If it's above 109, it could have a positive one. The impact could be short-lived. Okay, we might not have a huge reaction, but I mean, we could have a significant reaction, but it could not last that long. The moves of okay, now we have a risk off, and that could be more significant than this specific indicator. As we've learned in recent weeks, indicators are slightly less important, and market mood is more important. And the biggest influencers on market mood are central banks, of course. Okay. So focus on the euro continues. We have a few more indicators from Europe today. They're not as important. Consumer confidence in France. Oh, sorry, that's tomorrow. Basically, not much. I think we have some kind of business confidence from Belgium. Not so important. The big event for today is Mario Draghi, third public appearance in 3 business days. On Thursday, it was, of course, the most important one, as he spoke after the rate decision, and of course moved markets, ready to act. We already talked about that quite a lot. On Friday, he talked at Davos, basically repeating what he said. He didn't say anything new. Let's see if he has something interesting to say today. He will be speaking in Frankfurt at the opening New Year celebration of the German stock market, something like that. Anyway, it's close to his headquarters in the same city. Let's see if he'll have another impact. Of course, Draghi sometimes talks about other stuff, but I think the title of the speech is something related to monetary policy. Let me check that out. So it should be interesting. As in many cases of speeches, no, I don't have the title of the speech, but as in many cases, the text of the speech, full text, is released immediately at 6 GMT, and then we'll have the actual speech, and that will not move markets because we already know the text. What can move markets is if we have a Q&A session, which I don't know if we'll have. Okay, so Draghi is the main event of the day. It's a light trading day. It's not as important. I mean, not as busy as we have later in the week. Okay. And for those of you trading the Kiwi late at night, we have a New Zealand credit card spending. New Zealand is special in the way that it releases data. It's only once per month, per quarter. Retail sales, CPI, PPI, employment figures. So that's why credit card spending is of importance over there. Okay. But of course, most of us will be sleeping at this time. Let's take a bit of a look of what we have later in the week. So today, Germany for business climate, and of course Draghi. I should add Draghi here. I was making this slide last week. I didn't know that Draghi would be speaking. Tomorrow we have Carney. Draghi and Carney carnage tomorrow. Last week we saw how he lifted the pound. Sorry, hit the pound quite hard with the no rate hike. This is not the time. And what else? Yeah, and then we have consumer confidence from the United States. On Wednesday, it's a busy day. We have Australian CPI, oil inventories, which remain very, very important. The Fed decision, in which I expect them to be dovish. RBNZ not expected to cut, but stay dovish, or to become more dovish, sorry. On Thursday, GDP from the UK, durables, goods orders from the US, and rate decision from Japan, and the grand finale of GDP from the United States. Yeah, question for Rian, Forex crunch, euro-dollar forecast, euro, the Belgian and NBB business climate, despite coming from a small country. Wide survey, yeah, it is a wide survey of 6,000 or 7,000 businesses. It is highly respected. It did show an improvement. I didn't mention it today. Yeah, you know what? It's not as important. I mean, it's sort of third tier if you compare it to the IFO or, of course, Draghi's speech. Yeah, if we wouldn't have Draghi speaking, it would be a bit more important. It could move markets just a bit. It's worth mentioning. I mentioned it in the euro-dollar forecast, which is a bit more detailed, but I don't think, as we have Draghi today, I think it'll have a smaller impact. Let's see if it appears here. Anyway, yeah, it is highly regarded because it's sort of in the middle. It sort of reflects sentiment elsewhere, but I think the Draghi has more of an impact. I think it could have a very small movement on euro-dollar, small impact on euro-dollar. Okay. Any other questions? Let's see if we have more headlines regarding. Good morning, Sinatra. Good morning, everybody. Just take the opportunity to say again that if you go to fxstreet.com, you'll see there they have the Forex Best Awards voting in place. Okay, this link here on the top. And Forex Crunch is one of the nominees. I will highly appreciate if you could vote for me and vote in general. There are also, of course, other great candidates. So that's another thing going on. I tried today a new lamp. Apparently the light is still too strong. Right. You see me a bit too bright, I guess. I'll have to buy another lamp, I guess. Anyway, let's look a bit more at. Have any more questions about other charts, other things going on in markets? Yeah, a bit too bright. Yeah, as I thought. Let's talk a bit about the Fed, perhaps. It's fine, okay. Let's talk a bit about the Fed. Federal Reserve made a decision last month, after preparing us for nearly a year, that it's going to raise rates. Rates have risen from 0 to 0.25, that range, up to 0.25 to 0.50. Okay, the effective rate moves from around 0.1213 to 0.3637. All right. It's not a big move, 25 basis points, but it's the first rate hike in almost a decade and the first rate change in nearly 7 years, okay, since the financial crisis. It prepared us for a long time, ending QE back in October 2014, talking about a considerable time before raising rates, talking about patience, talking about not in the next meeting. And then finally in October, well, in September, they were sort of perhaps on the edge, but then we had the financial crash, stock market crash in China. And then in October, they finally told us, okay, next meeting, we're going to do that. We had all the hints, the historic move. The Fed raised rates, nothing happened. The world didn't collapse. Everything looked good. We had a Merry Christmas and a Happy New Year. But when the new year began, related to the Fed and not related to the Fed, we had stock markets sliding. You can say it's related to the Fed. You can say because of the rate hike, because it has a negative impact on emerging markets. Okay, you can also, but it's not only that. The Fed said the economy looks strong. The Fed said it's going to be ahead of the curve to mitigate potential inflation, not to have to raise rates abruptly in the future. Okay, employment looks strong. It did express worries about inflation. What did we have since then, apart from the stock market crash? We had inflation last week coming out A-OK, 2.1%. We had employment, an excellent jobs report in January for December, 292 jobs gained, if I'm not mistaken, 1,000. But on the other hand, we've seen retail sales coming out weak, manufacturing not looking good, a general slowdown in the economy. Okay, and that was in December. This week, we're going to get GDP figures for Q4. Also, this weekend, those of you, or those in the eastern coast of the United States, suffered a blizzard, snowstorm. We know in the past that Q1 GDP was weaker because of bad weather. This could happen once again this year. So all these things play to the downside, and of course, they don't like that stock markets are falling. So these are two things that are balanced. The Fed's mandates, inflation and employment look good. They should tell us everything is on track and we can maybe perhaps hike in March once again, of course, without a clear commitment, but data dependent, assuming everything looks okay. And on the other hand, they could say, no, we're scared of what's happening in emerging markets. Our inflation forecast is in danger. Okay, inflation now is okay, but it's in danger. We fear we don't want to hurt the economy too much. And they could give us a hint that they're taking a long pause, hiatus. Okay, no rate hike in March as it's implied by markets, and only a rate hike somewhere in the future. They will never admit, of course, that it's one and done, and they will never admit that they made a mistake. I don't think they made a mistake. And I don't think it's a one and done, but we could see perhaps only one more rate hike or two max, and not 2 or 3 like I thought, or not 4 rate hikes that their dot plot implied. Okay, in December they told us that it was a relatively hawkish hike, not a dovish hike, because they told us that we're going to have probably 4 rate hikes. Okay, that the interest rate by the end of the year, end of this year, 2016, will be 1.4% and not 0.4 more or less. Okay, so I believe they'll go dovish and support markets, and they will not like a stronger US dollar, and they'll add their share in the dove fest, their share in the global currency wars, and they'll be more, of course, not committing to anything. There's no press conference, no new forecast, but generally sort of more accommodating, more leaning to the dovish side. Okay, that was a Fed preview. Of course, we'll have a longer preview, and of course, we'll talk about potential market reactions on Wednesday when we have the event. Okay, a few questions I see here. Any explanation of the slide in crude other than weak Japanese and Australian data? No, well, Australian and Japanese data didn't have a lot of impact. I would say it's a correction. Yeah, I should wear some sunglasses. Yeah. No, I think it's a correction to what we've seen on Friday, the nice rallies in markets that we've seen. So now we have sort of a correction, a negative move that means weaker commodity currencies, weaker pound, well, not that much weaker, stronger safe haven euro and yen. but the moves are not huge. Okay, 30 something pips in euro dollar, 30 something pips in dollar yen, dollar CAD. Here we have a bigger move to the upside. Well, it's of course related more to oil, which is making a sharper move as we speak to the downside. So yeah, but I looked for some headlines and I couldn't find anything that sort of moved markets today. I would see this as a correction. Remember on Friday we had an enormous rally in oil. Same thing with rally in stocks, rally in commodity currencies. So now we might be seeing some kind of a correction. More comments, questions here. Just want to know what is the main focus for Draghi speaking today. Still focusing on interest rate or any other issue due to impact market? How about ranging price for euro dollar for this day? I believe he'll talk about monetary policy in general, the economy in general, growth, the need for reform, inflation, all his usual topics, warning about low inflation, about oil prices not only being transitory but reaching core prices. That would be, of course, a repeat of a dovish stance. Ready to act would be a repeat of a dovish stance. Talking about improvement, about the ECB's achievements so far, that would be hawkish stance. In general, he could repeat what he said on Thursday, and that could hurt the euro, even if it's not news. We'll have to wait and see. Our ranges for euro dollar, 108 is more or less support. I would say maybe 107.80 is better support now because it was the low seen after Draghi spoke. 107.10 remains strong support. 109, 109.50. I would say 110 is the higher end of the range. 107.10 and 110 are the stronger lines. In the middle, we have 107.80 and I would say 109. Okay. Questions here. If the Fed does a hike in March and the ECB change their policy in March, then we could be in for some great bearish action in euro dollar. Not exactly, because it's already partly priced in. Already in December, we knew that the ECB might act again in March, and we knew until a few weeks ago, the Fed is on track to act in March. Now, currently, both central banks could go dovish. No new rate hike from the United States in March, and perhaps some action from the ECB. So both go dovish. So I believe the pair has a bit more room to the downside, but not huge, not a great bearish action. If the Fed says that wants to hike more, what would strengthen you? Would it also bring down stocks? Yeah, if the Fed remains hawkish, remains optimistic, sees employment is strong, inflation is good, and things like that, it could be better for the dollar, but against commodity currencies and against the pound, negative for stocks, negative for oil, negative for euro dollar. No, sorry, for euro dollar and more for dollar yen. It will not necessarily be dollar positive because these are safe haven currencies and they could benefit from a darker mood in markets. If they're dovish, I think it could weaken the dollar as well. Euro dollar is a much more tricky currency pair when talking about Fed action, because on the one hand, Fed action means a stronger US dollar across the board, and on the other hand, it's risk aversion and a stronger euro. Okay, so we could have a mixed reaction over there. Of course, if they're hawkish because of the stronger US economy, and they also seem to brush off worries from elsewhere in the world, it could be positive. Okay, I mean, positive for the dollar also against the euro. But if they're hawkish but still cautious, then I mean, just because they said they will raise the rates even more, they continue doing so. It could be better for the safe haven euro. Slight drop in oil is good because if we bounce, create double bottom, then we have reversal. Yeah, I mean, so far what's going on this morning is It's a correction to what we've seen on Friday. No new data, no bad news. So we do have a risk-off move, but nothing, no disaster, no. So maybe this could be just a correction within the trend. Yeah, unless we have some more bad news, and then it could be a reversal. But so far, I think markets are still optimistic, still carrying the pinky glasses, the rosy glasses from last week, with all the central bank blitz. I don't see them returning to a gloomy mood. We didn't have any bad news from China this morning, so far so good. Of course, the mood can change. In the past weeks, each time we had a correction, and then we had a counter correction. I mean, the trend resumed negatively for stocks and oil, and for commodity currencies, positive for the yen and the euro. But this, after that blitz last week, this rally could hold on a bit more, and the current slide could be a correction. Another question here. No more hot pairs today. Euro dollar clearly, because we have the IFO figure, and of course the and Draghi speech, and very few other figures. As we said, the Belgian NBB, which is also euro related, so it's all, I think, all about euro dollar today. In the next few days, it's going to be a lot more mixed. Okay, let's get to the wrap up for today. So this is a wrap up for the live market open for January 25th. It's a Monday morning. Markets are relatively calm. What we're seeing today in markets is some kind of correction after the risk-on rally. So we had a blitz of central bankers talking about supporting the economies, the Bank of Canada, Bank of England, Bank of Japan, and of course the ECB with Draghi promising action in March, all pushing lower the euro and the yen and pushing higher everybody else. This morning we're seeing some kind of reversal, but not on any significant news. So euro dollar is higher within the range, 108.30 to, at the moment, some support at 107.80, resistance 109, 109.50, 110. Pound dollar sliding a bit in the range, 142. 142.40, some kind of support there, resistance 143.50. All in all, it's off the lows of the 140 handle. And pound had a terrible week, but then a big bounce last week. Okay, dollar yen. Also, after the Bank of Japan said it more or less enough is enough, we're worried about currency markets up to 116. Now we're at 118.35, 119.20, 180, 118.30 are the lines, but it's not that strong. 117.30 is further support. Dollar CAD, very, very exciting week last week. 142 is the current level. We had it rise all the way to 147, finding some support at 144.40 before sliding back down. I would say that 140 is support because it's a very round number. Oil prices now are falling, and so is the Canadian dollar. But oil prices and the Canadian dollar had a huge, huge recovery late last week. Aussie dollar also with the risk off, the current correction sliding off 70. 70.65 is 69.50 is support, followed by 68.30, which is very, very strong support. Resistance 70.65. Kiwi dollar also sliding within the range, 64.83. Okay. We have today, we don't have many events, but there are important ones for the euro. Just after the show, Germany for business climate, Germany's #1 think tank, expected to show a small deterioration in sentiment, nothing huge. Any bigger change will have an impact. We know that this is one of the more impactful figures. At 6 GMT, we have Draghi speaking in Frankfurt. Third public appearance in 3 business days. Of course, the first one was the most important one. On Friday, we didn't have different tunes. Let's see if today we'll have something new from Draghi. And the 2 GMT New Zealand credit card spending. This week we have, this is a light beginning to the week, but later in the week, it's going to be very, very, very busy. Okay. So currently, general picture is slight correction. That means safe haven currencies are a bit stronger. Euro yen, all the others are a bit weaker, but the atmosphere in general is still relatively positive after many weeks of a negative atmosphere in markets. Okay. Comment here from Sandra, some interesting look into oil and global politics from FX William Engdahl. Okay, thanks. Have a look at that. All right. And yeah, okay, so that's it for today. Thank you very much, everybody, for coming, for the questions. Let's see how things develop, if we return to the negative mood, or we, in general, or we're just seeing a correction. And I'll be here, of course, tomorrow with more events. Let's see what we have just to peak for tomorrow. Well, our Carney focus shifts back to the pound and consumer confidence. And of course, the tension will grow towards the Fed. All right. So, okay. So that's it for today. Wish everybody a safe and successful trading day. See you tomorrow. Goodbye.